Well, good day, all. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for the evening of Wednesday, and we are sitting here now at the 1st of October, 2025, about 6:05 p.m. Central Time. The stock market a little lower. I was frankly surprised it rallied today. I didn't understand that rally, but it did it, and away you went. Now, something to think of. Historically, that's all I can tell you is historically, you normally get a break when these shutdowns are announced, and off those breaks, about a week later, the market starts to rally again. So we'll see if that is in fact going to be the case. Metal markets are a mixed bag. The gold certainly went up for a big rally, approaching that 3,900 level. Plus, it's backing off a little tonight along with the silver. The dollar broke back into support of the 18-day average of closes. The other currencies sort of drifting here as everybody's going, so how long is this going to last? What do I do with that? Where do we go? Interesting play. I've joined the bear camp on the energies. You'll see my special report on it, and you'll understand why if you take a look at it. And am I telling you to sell it here? That's not what I'm saying. I said I've joined the bear camp. There's a very big difference. When we take a look at Bitcoin, it came back, as you know, from that 110,000 level, and it's done very well. It's back to the 119 level here. Bonds and notes, they are sort of going sideways, but we did see today, you got under the I think you hit 4.098 at one point in the 10-year note. So traders were buying into this market. Now, let's take a look for just a minute and understand something. You are going to get at 6:30 in the morning the Challenger Group report. It's going to come out because it's a private company. So Challenger Group will come out. The August number was 85,979 planned layoffs. We'll see what September's going to offer. You're not going to, and I want to repeat, you're not going to get the weekly jobless claims report. The Bureau of Statistics, which publishes it, is closed. Factory orders will not be published due to the government shutdown. The U.S. Census Bureau, will not, which publishes that report, is also shut down. So keep in the back of your mind, fully funded government agencies are shut. Your mail route is open. Why? Because you're paying for postage stamps. You're paying to ship the labels there. It's different than tax dollars. So there's a fine line, and you got to think that through. Plus, you got to have the mail run, rain, shine, whatever. Remember that. EIA natural gas storage report from the EIA. That's not a government agency, okay? So what we look at is they're funded different, and their report should come out tomorrow, I believe, at 9:30 in the morning. I know it's confusing, but it's the way that it operates. So please understand that. Maybe we go here before I get you too far. If you go to our website, you're going to see in green my energy report. Give it a click if you're not a subscriber. My subscribers can just go into their member login and see where the report is there. It's pretty simple to do. My reports are up for 3 business days. All right. So let's go now to the charts and see what we can get. And let me get myself set over here so I can see them. There we are. All righty. If I had another assistant here, we could have them doing all this. But I built this so that I can do it. I don't need anyone here as I do all this, and it really has made it easy. Try it at home. It's not the easiest thing to do with all we do here. All right. So when you look at the S&P, if we closed right now, you're up 0.91% for the week at a new all-time high close. When we come to the bar chart, remember, I thought that the market was caught between here down to here. Just said this yesterday. The market poked, challenging that. Is it going to give it up, or can it stay one more day? We'll find out. If it does, that's going to look bullish. Why? Because you've got a pattern already of higher lows, higher highs. I'm sorry, that's bullish. To get me to the point now where I say, the market's ready to break down, by Thursday or Friday, if you take out the lows of today, be careful. So Thursday or Friday, if Wednesday's lows are taken out, that'd be a problem for the market. When we go to the S&P here, higher lows, higher highs. The support, the 18-day average. I do think, and I want to go on record, whatever break we get out of this over time, I am not in the camp that doesn't think you're not going to have a year-end rally. The question is how deep a break. I want to see a 3 to 5% break. I'm sure if you talk to other analysts, they want to see the same thing. Get some of the froth out of the market. Individual stocks are doing that to a degree. You've got the higher lows, higher highs, and coming potentially up to the Bollinger top at 67.89. When we take a look here, you had a market that is trying to re-embed. I'm fully aware of that, but it hit its objective earlier. So that's fine with me. That's why I'm still very much in the bull camp. The NASDAQ, if you take a look, is it going to get through these highs? It certainly has all the appeal to do it. It never hit the low. It made its run for it. So when you lost the bullish embedded reading, you made the run. Ideally, you hit that number and you didn't. More like the Dow. When it lost its reading, it came down and hit it. Now it's trying to be good again. And in the Russell, when you lost these readings all through here, they came down and did it. So it's really the S&P that's got the strength of the market. And I almost think you got to look at it different than the others. This is power. The DAX not only got through the Bollinger Band on a close, it closed at the top part of the range. It is overbought. If the market makes a higher high tomorrow and closes in the top quadrant, that would be, to me, a formal breakout. I would not expect this low to be taken out again in the near term, and certainly I'd look for contract highs if that occurred. In the December notes, you're getting a bear market rally. You still have a market with lower highs, lower lows, or do you? Well, I can also make an argument you got higher lows with the higher high, and the 18-day average should be the resistance. I could say the same thing, and I will say the same thing, that now I will look going forward, if this is a trade bottom and this is the resistance point in the market, and I'll change the arrows on there. Sometimes I like to leave them so you can see what I'm going to do with them. In the dollar index, I said it's still in a bull mode. You have to take out, in my opinion, 96.83.5 on the current formation in order to say it's not. It got overbought. It's trying to correct it. Both numbers finished under 70, so you're no longer formally overbought. I think the pros are taking nibbles of the market with stops under that low. In the euro, the resistance is the 18-day average. I think the pros are nibbling into the short side with stops over that high. That's what seems to be on the chart. When we take a look at the pound, I told you yesterday I thought you might get a rally into the 18 and the 100-day averages. We did. The market is no longer in oversold condition. So I think the pros are going to come out and nibble on the short side of the pound, literally right here. In Bitcoin, it's one of these markets that went from the lower band basically to the upper band to the lower band, coming back up, might hit the upper band. It's all over the board, and it is an overbought market. Now, in the crude oil, we've just taken out a series of these lows. I do look for near-term support to try to hold in the market at 64.75, the lower Bollinger Band, but you have no trend. I think the market's gone into a downside bias phase. The same thing going on in WTI. Heating oil, as I told you, should not participate in the same manner, and it isn't. It's begrudgingly falling. It's not acting like the crude. And in the nat gas, you went up now to the Bollinger Band, and I think with the overbought condition, it's gone far enough. Does that mean I'm bearish? Not at all. It means that I think the pro is going to take his money off the table and say, thank you, I took my risk, you're up there. The odds of staying over that number are 5%. I'll take another look at a market that's overbought. Again, please do yourself a favor. Take a look at the special report that I put out for you on the energies. It will go off our board by Friday. I just don't know the time. You take care. I will see you in the other videos tonight or in the morning flash video. I didn't do one this morning. We'll catch up with that in the morning. Take care.